All right, Chapter 8 on segment and interim reporting. So, part of the footnotes that must be attached to the back of all financial statements is segment reporting. And so, a business that engages in any kind of revenue generating activity that are split apart for purposes of senior management managing the entity as a whole must provide some basic financial information in the footnotes. All right, so what is a segment? A segment is anything that management decides it is. It could be regional. You could have a North American segment, a European segment, an Asian segment. It could be by product line. You could be by major customer. So you could have a segment on commercial aircraft like Boeing does, and then have a separate segment on Department of Defense, and then have a third segment on aerospace, satellite operations, and the like. So it's whatever management decides it is, however they internally divide the company up. So in this is, once again, is more of that. So it could be the nature of the product or service, the class of customer, the distribution methods, the regulatory environments, and the like. So these segments are tested with 3 tests to determine whether it is a reportable segment. So you go and you collect all of the revenue and expenses associated with each of the individual segments that are defined as by management, and all of the assets that are controlled by each of those individual segments. And then you're going to do 3 10% tests: a revenue test, a profit or loss test, and then an asset test. So a revenue test. So here's a Atkinson company, has 6 defined segments: automotive, furniture, textbooks, motion picture, appliance, and finance. And there are the revenues generated for the most current fiscal year. So 97.8 is the total. So 9.8 is the threshold. So any segment above total revenues of 9.8, which is the automotive segment at 41, the motion picture segment at 22.8, and the finance segment at 12. So those 3 segments qualify under the revenue test. And there's the 3. So now you calculate profit and loss from that total revenue, and that total revenue is defined as all internal and external driven revenue. So even if the segment is selling to another segment, it is included for the revenue and this profit and loss test. So in here, you're going to take the absolute value of the highest column. And in this case, the highest of the 2 columns is the profit column, 16.5 versus the loss column at 3.9. So 1.7 is going to be the threshold. So once again, automotive qualifies, furniture now qualifies, and it's the absolute value. So textbooks do not, because it's not above 1.7 in the loss. However, motion picture does. And then lastly, finance. So there's the, well, that's the profit and loss once again. And then lastly, the assets. So the assets total 44.3. So 4.4 is the threshold: automotive, motion picture, and finance. So in order for it to be qualified and reported separately in this footnote under segment reporting, it has to meet just one of these 3 tests. So automotive met all three, as did motion picture and finance. Furniture only met the profit and loss test, but yet it is included. The only two that are excluded from this reporting is textbook and appliance. And then the last test is the 75%. Under this, you just use external sales. So you do not include internal entity sales. And the segments that are reported have to total 75% of the total company sales. And then if they don't, then you add additional segments until such time that the 75% test is met. So here's a flow chart on all that. I'll let you guys look at that in your textbook. So what do you need to, once you've identified the segments, what do you need to report? You need to report general terms as to how management went about determining what is a segment, the types of products and services each individual segment provides in order to generate its revenue. And then you need to determine revenue from external customers, other transactional internal revenue being generated, interest and revenue and expenses, depreciation, depletion, and amortization, equity and net income of investees. So in other words, if any one of these individual segments has a subsidiary, then you need to disclose what that income is, any non-cash or unusual items, and then the income tax expense or benefit. The total of the reportable segments it needs to be reconciled to the consolidated revenues so that the readers of the financials do have an idea as to what revenue, expenses, and the like are being generated profit and loss wise by the non-reportable segments. And then the assets also have to be reconciled back to the consolidated total. Information about geographical attitude. So this is separate from, this is other information that has to be disclosed separate from the segment reporting. So we've finished with segment reporting. We also have to provide information about revenues and long-lived assets in the domestic company and all foreign countries. So all the foreign countries where an enterprise derives revenue or holds asset, and where a material amount of revenue is being derived, so that needs to be provided. And then the last disclosure in this chapter is major customer. If a single customer generates 10% or more of the company's revenues, then that needs to be disclosed. You don't need to identify the name of the customer, you just need to identify that a major customer exists. So if the U.S. government, for instance, provides more than generates more than 10% of your overall revenue, you have to disclose that you have a major customer. And that's it.